companies which actually perform almost the same functions like banks do, two primary functions of accepting deposits and lending loans. But these companies are not called as banks, but they are called as shadow banks. They fall into the NBFC category, which is the non-banking financial companies category. But then what is the difference between a bank and NBFC? Or what is the difference between bank and shadow bank? To know more, check out the full video. Hi guys, Rachana Ranade here, and I welcome you all to my new lecture on top 2 banks in NBFC space. I was talking about that what is the difference between banks and NBFCs, which are the non-banking financial companies. Banks and NBFCs, similarity number 1 is that both accept deposits and give loans. But then what is the difference? Banks are allowed to accept time deposits as well as demand deposits, but NBFCs are allowed to accept only and only time deposits. Pardon me. Now, what is time deposit and what is a demand deposit? Time deposit means like an FD or like a recurring deposit. But what is a demand deposit? Demand deposit is something where the people are going to demand their money and the institution will have to pay them back. So, what is an example of a demand deposit? Can it be a saving account? Yes. Can it be a current account? Yes. So, quick question, can I open a saving account in any bank? Yes. Can I open any current account in a bank? Yes. But can I open a current account or a saving account in any NBFC? Answer is no. Okay. So, NBFCs, now quickly tell me, if I am not allowed to open current account or saving account in any NBFC, if I am not allowed to do that, is CASA ratio, which is one of the most important ratio in the banking sector, is that going to be important? Answer is no. Okay. This ratio, what is CASA? I've explained in my video on top 2 sectors, top 2 companies in banking. Have a look at it. So I hope you have clearly understood what is a differentiating factor between banks and NBFCs. One last and one more important, I can say, there would be many more differences, but one more important distinction is that banks have a banking license. NBFCs don't have a banking license. So those entities which have a banking license have to put the word bank in their name. So what does it mean? ICICI Bank, HDFC Bank, Bank of India, okay, Bandhan Bank, they have to put bank in their name. But if you are talking about NBFCs, then they are not allowed to use the word bank in their name because they don't have a banking license. So take this example, Bajaj Finance, Muthoot Finance, okay, Manappuram Finance, they are not allowed to use the word bank. Okay, I hope you have understood a clear-cut distinction between banks and NBFCs. Now let us understand the current economic scenario for any NBFC. I'm sure everyone knows that there's a moratorium period which is ongoing right now, where RBI had declared that individuals or those who have taken a loan basically are allowed to defer payments for a period of 3 months. Was this moratorium applicable only for bank or only for financial institution or both? The answer is both. So whether it be bank or whether it be NBFCs, both are going to have the impact of this moratorium period. For people like you and me, is it a blessing? It is, no doubt about that. But what for NBFCs? For NBFCs, it is going to be a problem with the liquidity. They are not going to get back their money in time. If they are not going to get back their money in time, will their lending capacity decrease a little bit? Answer is obviously yes. Number 2, with the current lockdown, can I say businesses are going to get impacted? Answer is yes. If businesses are impacted, then automatically the overall liquidity or overall repayment capacity of individuals is going to get hampered. Okay. So second point, one more time quickly, with COVID-19 impact, the businesses are going to get hampered. If businesses, top line sales only get hampered, profit is going to get hampered, liquidity is going to get hampered. Will that have a negative impact on the business? Yes, but will that also have a negative impact for the NBFC? Why not? Absolutely yes, because the repayment that they are going to get from individuals is going to get hampered. So let's start with the top 2 stocks which I'm going to talk about today. But before I move on, please be aware that banks or NBFCs, this is going to be a sector which I feel will recover a little bit slowly as compared to other sectors. So even if you are wanting to invest in any bank, which I have discussed in my previous video, or any NBFC which I'm going to discuss in this video, I feel that the time frame of horizon in this should be on average 3 years or more, because I feel that other sectors recovery versus banks and NBFC recovery, the second half, which is banks and NBFCs, are going to recover at a comparative slower pace. Okay, so let's talk about our very first stock today, that is Bajaj Finance Limited. Okay, let's understand the top 3 positives of this bank. The number one is it's a leading NBFC of the nation, and it has a strong parental and a customer base. Bajaj, the brand name, the solid brand name it has, is one of the biggest positive. It has a very good customer base as well. Number 2, the assets under management grew by 35% year on year to 1,45,092 crores, which was driven largely by the mortgage business. Mortgage is basically like for housing. You mortgage a house, right? So when more and more mortgages take place, that is where companies like Bajaj Finance are going to benefit. So their major increase of the assets under management increased because of the mortgage business. Okay, and the last one is that PBT grew by 36.9%, while net profit surged by 61% on a year-on-year basis. Let's understand the top 3 negatives for Bajaj Finance. Number 1, promoter holding has decreased by 2%. See, promoter holding going down is never ever considered as a positive point for a simple reason. If the promoter himself or herself is selling stake in the company, it means that somewhere they have a little bit negative notion about the company, and that might be the reason why they are selling shares. But please be aware, every time promoter selling shares is not a negative case. If they are doing so to meet a requirement, like I'm sure everyone knows about the SEBI requirement. I have discussed this requirement in my Demat video. Okay, if you have not watched it out, just check this video wherein I've explained that SEBI itself says that the promoter holding should not be more than 75%. So let us assume that the promoter holding was 76%, and if it has moved from 76% to 74%, the reason is that they had to meet a legal requirement. Okay, but if that not be so, then it is considered as a negative. Okay, second one is that provisions have rose by 85% year on year. Increasing provisions are always a negative. And the third one is that credit crisis is going on in the country, and that might be a high risk. I just talked about what sort of credit crisis. Credit crisis will come with the fact of the economic slowdown. If there is an economic slowdown, repayment capacity decreases, and that will have a negative impact. Okay, let's come to an interesting fact about Bajaj. What is the biggest plus that Bajaj has? It's Pune based. Khatam. Right? So it is based in Pune. The main company based in Pune. And an amazing fact about the company is that if you had invested to 5.75 rupees in 2002, that was the base price in 2002, you would have earned a potential returns of, you can check this out on the screen, you would have earned a potential return of almost 83,000%, and that's amazing. Maybe it just comes from the fact that it is from Pune, guys. Okay, let's talk about the second company in the NBFC space. The name of the company is Ujjivan Financial Services. Please be aware, I'm not talking about Ujjivan Small Finance Bank. Ujjivan Small Finance Bank is a small finance bank which had come up with an IPO in the immediate previous year, the previous financial year. But the parent company of Ujjivan Small Finance Bank is Ujjivan Financial Services Limited. Okay, that's an NBFC. Top 3 positives. Number 1, it has a very attractive price to book value ratio of only 0.93%. What does this mean? If the book value per share, as per the books of accounts, as per the financials, if the actual price, the book price of the share is 1 rupee, we are getting it at a comparative discount to that. We are getting it at 0.93. That's a big positive. In short, we are getting it at a cheaper cost, right? Number 2, the asset under management has grown a lot. So that's a big positive. And NPA is very low as compared to its peers. Their peers are having much more higher NPAs. Their NPAs is approximately 0.5 to 1% of the total advances base. So a big positive for that as well. Let's move on to the top 3 negatives now. The very first one, it has a very high debt to equity ratio. That's almost 6:1. I do explain many concepts in my live stream. I had done a live stream, you can check out in the thumbnail as well. I have done a very good analysis of debt to equity ratio and its impact on ROE, return on equity, right? So be very careful on this debt to equity ratio. If it is way too high, it's going to have a negative impact, right? Number 1. Number 2, the promoter holding is 0. Okay, so is this really a negative? Could it be a case where it's a professionally managed company? Yes, if it's a professionally managed company, promoter holding is generally 0. But why do we expect that a company should have a good promoter holding? Simple reason. If the promoter is having a good vision, then ideally the company has a capacity to grow at a higher pace. Let's take example of my own company. If I am the promoter of the company, okay, then I do have a vision about my company. It means that if I put my sweat and blood in that, my company, I will try my best to grow it at the highest possible growth rate. But if I myself don't hold a lot of shares in my company, then I don't really bother about that in that case, right? That might be so. So it is very important that if we are talking about the promoters of the company, they ideally should have a good stake in the company. In this case, it's a zero promoter holding. And the last one is the same. Because of the current crisis, COVID-19, the business might have a negative impact. One small interesting fact about Ujjivan Financial Services is that, as I mentioned right now, they came up with an IPO of their subsidiary, which is Ujjivan Small Finance Bank. I had again made a separate video on Ujjivan Small Finance Bank IPO. You can check it out after watching this video. I know I'm giving a lot of references in this, but I could just, recall all the videos that I've done in the past. Do have a look at this video as well. In that, I've explained as to why Ujjivan Financial Services came up with the Ujjivan Small Finance Bank IPO. It's a mandatory requirement, and I've mentioned that it's a mandatory requirement whereby there's a time limit which is given. If you have a small finance bank, if you have promoted a small finance bank, there's a time frame within which you have to list it, and that is what Ujjivan Finance did. They got their SFB listed within the time frame, and the Ujjivan Small Finance Bank's deposits have grown at an amazing percent, at 96% year on year, from 3,772 crores to 7,379 crores. That's a big jump. Finances are concerned, for Bajaj Finance, they are having a very nice growth, 37% income growth versus a 5-year growth of 33.94%. Profit has grown at the rate of 56%. ROE, return on equity, is 22.13% with a 5-year average of 20.99%. ROCE, return on capital employed, is 14.69% with an average 5 years of 13.35%. In short, the return parameters, return on equity or return on capital employed, or maybe even income growth or profit growth, very, very important point. Their 1-year growth, last 1-year growth, has been over and above the average of 5 years growth. Okay, as far as the Ujjivan Financials is concerned, the return on equity, return on capital employed, income, profit, all these parameters are not as high as Bajaj Finance Limited. Even if you check out the market capitalization, with that you will get an idea. See, Ujjivan Finance is just having a market capitalization of 1,719 crores versus Bajaj Finance, which is like 1,32,813 crores. So that clearly gives you an idea about how Bajaj Finance is much a gigantic company as compared to Ujjivan Finance Limited. But if you want to bet on, smaller size stocks, then Ujjivan's finances are not bad at all. The Bajaj Financials financing margins, I should say, are 33% versus Ujjivan being 14%. EPS of Bajaj is 94 versus Ujjivan at 21%. Interest coverage is good for Bajaj, again 1.93 versus 1.28. Promoter holding is also 56% versus 0% for Ujjivan. PE is 24, but Ujjivan is having a PE of only 6. Price to book value 14 for Bajaj and only 0.93 for Ujjivan. For debt equity, Bajaj is 5 and Ujjivan is 6.31. All in all, you might have understood that Bajaj is far better in financials as compared to Ujjivan. I hope you have understood this entire content about top 2 stocks in the NBFC sector. Do remember 1 or 2 important points. Bajaj Finance is good if you're checking out larger players. Ujjivan Finance is comparatively a smaller player in this sector. So keep that in mind. Number 2, keep it in mind that if you are looking at these stocks either from the NBFC space or the banking space, the time frame for investment should be approximately 3 years. These are not very good stocks from a comparatively shorter time frame. Number 3, do your own research. I just put forward my research. I always give disclaimers. Don't forget to read that. And if you're liking this content, you may consider sharing this content with your friends. You may consider subscribing to my memberships as well as to my channel. And last but not the least, the most important person who is recording this video, and you're not allowed to make faces. Second time he is here in the video. He is just wanting to be in the camera, just loves to be in front of the camera. Okay, so that's it from our side for the day. And what do you have to say? Jai Hind and bye bye.